So welcome to today's class. Our subtopic, we are still under advanced capital budgeting, but the subtopic is called sensitivity analysis. So allow me to proceed. Sensitivity analysis. So from the word sensitive, that means that you're exposed to some changes or vulnerable to some changes whenever something happens, right? So we normally have variables. And then there is a function. So if I say, for example, bx plus c, then we know that this one is a variable. Is also a variable, and this is a function. So therefore, in that case, we are saying that a change on x or change on c can bring change on f. Similarly, I will normally have profit is equal to price minus variable cost into quantity minus the fixed cost. So whenever we change any of these, we shall be having the impact on our profit. In sensitivity analysis, we are trying to look at how sensitive the profit is vis-a-vis a change on one of the variables. When you change one of the variables, what will be the implication, the percentage change on the profit? In this case, the profit is called the NPV. NPV. Remember what we said earlier in capital budgeting? We agreed that capital budgeting, we are basically looking at the best investment that can give us the highest profit. So we need to budget on an investment that can give us a good return. That is capital budgeting. We are budgeting without capital on investment that can give us the best results. It can be one. If it is one, we look at the positive or negative part of the final return. Is it a profit or a loss? If there are so many, then we need to look for the highest profit, right? Then, normally, when you invest in a project, there is something that we call IO. IO is the initial outlay. And the initial outlay is the cost of investment, the cost of buying the machine. Then after buying the machine, there is the normal cost like the running or operational cost. This operational cost will give you a total of what we call normal profit, or we call them cash flow. Every year, we shall be having a profit, which we call cash flow, normally on our financial statements, right? Now, that particular cash flow, plus the cost of selling the machine in case you sell it at the end of the day, or at the end of 5 years, you sell the machine, we shall have two revenues. One revenue is from the normal operation profit. Another one is the sale of the machine, which is a salvage value. Now, those two sources of revenue, they need to be discounted because you're going to get them after a certain period of time. You generate them after a certain period of time. But because of the value of money, the revenues will not be equal or equitable to the initial cost. So you cannot compare the cost of investment that you incur today with the revenue that you get in the future. You need now to discount the future cash flows or revenues so that we can be able now to compare them on equal timings. That is why we normally discount the profit, which we call cash flow. We discount them. When they are discounted, we now subtract the so if we discount them, you call them present value. You bring them from future value to present, from future to present. You get their present value. And of course, this IO, the cost of investment, is also in present terms. You now have present value minus IO, and that gives you NPV. This NPV is the final return on that investment. It means that you have deducted all the associated running costs, where you get now the profit. You discounted the profit to get the present value. Again, on that total profit, you have deducted your cost of investing, then you remain with the net profit. We normally evaluate or judge the investment with the NPV. We evaluate or judge the investment with the NPV. Now, We now want to look at some of the changes. When we look at the NPV, it is composed of these variables. So we want to look at the impact on these variables that will cause a change on NPV. So let me write the formula for NPV in the code before we go into detail. So NPV is normally the cash flow, which I've shown you how to do it, times PV or PV for whatever is applicable, minus, no, plus the salvage value if we have the last residue, meaning kama uko na machine wakati imezeeka, that piece that you're going to sell is the salvage value. When you sell it, you generate some income at the end of 5 years. So you need to discount it using PV, not PV for, because it is a one-off thing. All this will be your revenue or income, now minus the IO. If you don't have salvage value, fine, just use this one only, you call it present value. If you have it, you add all these will be the present value. Minus now IO, you get your NPV. So in sensitivity analysis, we want to look at how sensitive the NPV is in relation to the movement or changes on these factors. This one we were able to break it down. You know that we have profit here. This profit is made up of the price minus variable cost times the quantity minus the fixed cost. Then we get our cash flow. So if we change any of those ones that I've mentioned, they are the variables, then we might have an impact here. We shall see the change that we will cause here. That's now the sensitivity analysis. We are trying to analyze how sensitive it is in relation to such kind of costs or movements. I want to write and say that sensitivity analysis focuses in determining the effect. It focuses in determining the effect. It focuses in determining the effect. So this one is our number 2. Number 1 was simulation. So number 1 was simulation. This one is number 2. Sensitivity analysis focuses on the effect on net present value. It focuses in determining the effect. It focuses in determining the effect on the net present value due to a change in a given variable. The effect on net present value due to a change in a given variable. A change in a given variable. Holding other factors constant. Holding other factors constant. So the variables, you will change one at a time. If you change price, you don't change cost. If you change fixed cost, you don't change the quantity. You change them one at a time. So we want to see the impact on NPV as a result of a change on one of the variables. As a result of change on one of the variables, holding other factors constant. There are types of sensitivity analysis. We have types of sensitivity analysis. The first one is called impact analysis or impact sensitivity analysis. The other one is break even. Break even sensitivity analysis. Impact analysis and break even sensitivity analysis. Under impact analysis, you will be given the percentage of variances. You'll be given percentage You'll be given the percentage of change, the percentage of variation of change on one of the variables. They will give you the percentage of variation or change on one of the variables, change on the one of the variables. But under impact analysis, no percentage is given. No percentage of change is given. You'll not be given the percentage of change. Under impact, there is no percentage of change that will be given. Now that those ones are okay, I want us now to look at the first one, impact analysis. So in impact sensitivity analysis, I want to say impact sensitivity analysis, you can say that it seeks to answer the question. It seeks to answer the question. It seeks to answer the question. It seeks to answer the question, comma. It seeks to answer the question, comma. It seeks to answer the question, comma. What is the percentage change of NPV? It seeks to answer the question, comma. What is the percentage change of NPV? What is the percentage change of NPV? What is the percentage change of NPV? As a result of a given change in a key variable, what is the percentage change of NPV as a result of a given change in a key variable? Then you say, for example, what is the change in NPV as a result of a percentage?
Phone number says.
What is the percentage change? What is the percentage change on NPV as a result of a given change in a key variable? For example, let's say that we have revenue. So in case revenue is given as per annum is 10,000. Then we have cost per annum is 6,000. We have the cost of capital. Cost of capital is given as 10%. And then we have number of years. These are number of the years that you keep on generating income. Number of years is 5 years. Investment cost, or cost of investment, is 4,500. The cost of investment is 4,500. Required. 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 Determine the NPV of the project. Determine the NPV of the project. That is the first one. Number two, carry out sensitivity analysis. If carry out sensitivity analysis, if carry out sensitivity analysis, if so, Abdi, this is the example that we're looking at. So I want to copy from here types of sensitivity analysis. You can take a screenshot. We have two types, impact analysis and break-even analysis. So we are looking at impact analysis. This one is an example of impact analysis. In impact analysis, the percentage of variation or change on the variable will be given. Percentage of real variable change is given. But under break-even, it is not given. So, and remember we are in advanced FM. So if you are taking advanced FM, you are in the right class. We might waste your time and you don't do FM. So this is an example that you want to see how impact analysis works. We say that in impact analysis, they have to give you the percentage change. If they don't give you, maybe it is not even impact analysis. It could be something else like break-even sensitivity analysis. Now, that is the first question. Carry out sensitivity analysis if Roman 1 perform sensitivity analysis. Now Roman 1 if, that is where the condition now comes in that will guide you. If revenue and cost are varied by 10%. If revenue and cost are varied adversely by 10%. If they are varied adversely by 10%. They are varied adversely by 10%. So, you've been given a percentage has been given, and they're telling you that one of the factors that you can see is a cost and revenue. Those are one of the variables. They are changing adversely by 10%. So we shall perform sensitivity analysis of that. Kindly copy and let me know. So we start with the first question was asking determine the NPV. How do you get the NPV? Those who are there with me yesterday, we were able to look at something small about how to get NPV. So let's do that. So NPV is like a profit. So we shall start with getting our, let me say solution. Question number 1. We start by getting our profit. So profit, which is denoted like this, is normally the revenue minus cost. In this case, we don't have quality, so that means that this one is total revenue, total cost. So that will give us 10 minus 6,000. Our profit is definitely 4,000. Ordinarily, yes, we need to get the cash flow. Ordinarily, if you have been fixed cost, then we need to deduct from here. After deducting this fixed cost, we also deduct if we have any depreciation. We should deduct any depreciation. But that one we don't have, don't we? We don't have depreciation. We don't have any other fixed cost. So that means that this is now the final cash flow. Hakuna kitu kingine yenye tunaweza toa hapa. So every year we're getting that amount. If there is anything we need to take from there. So our cash flow, we say that since there is no depreciation, there's no other fixed cost, depreciation. If they had depreciation, they would have told you that this asset needs to be written off in a straight line basis. They could have told you for 5 years. There's no depreciation or tax. Then cash flow is the same as profit, which is basically 4,000. NPV is normally the cash flow times PV per. Why is it PV per? Because this one is annual, every year. So it is PV per times the R, that is the percentage rate, there's the number of years, minus IO. Okay, so can somebody get for me PV per? Did I give the percentage? Percentage you are given 10%. Can you get me PV per 10% 5 years? 10% 5 years. What is the value of PV? What is it? So we are getting it to be the formula for getting PV per is normally PV per. The formula is 1 minus bracket 1 plus R, and all this under R, that is PV per. For PV per, that's where we have the regular cash flow. This is for regular cash flow. If the cash flow that you want to discount, we are discounting this cash flow if it is regular. If it is irregular, you use PV, not PV per. This A means annuity. So it is present value interest factor annuity. Present value interest factor annuity. It is not annuity now. Sio kila mwaka. And the formula is basically 1 plus R negative 2. Just like that. Negative N. So N is the number of years, R is the rate. Now, when you use that formula, you're going to get what my good students are getting here. And that is what we are looking for. So we are going to have cash flow. The cash flow is now 4,000 times 3.7908 minus IO was 4,500, right? So all this, what are you getting? Sadia is getting NPV to be 10. 663.2. Always give a conclusion. Always advise. Whenever you're trying to get NPV, the reason why you're getting it is so that you can advise on management decision. Tell them accept the project. This particular comment only can take you places. Accept the project. That comment will take you places. That comment will take you places. Right? So the next part is now to perform. Whenever you're calculating NPV, any NPV, always check. If it is positive, accept. If it is negative, reject. So reject the project or accept. That is the conclusion when you get the final figure for NPV. The next one now is for us to look at the sensitivity analysis now. So for us to perform sensitivity analysis, first we need to get the initial figure. You know what I'm saying? In sensitivity analysis, you're looking at the percentage change on the NPV. So how do you know that the NPV has changed? You need to have known the original figure. At first, what was it? Right now, what is it after change? So before the change, this is before the change. Now, after knowing it before the change, now they're telling you to tell us what will happen if you adversely vary, the revenue and cost. So we say sensitivity analysis of revenue. We can now vary them adversely and then we see the change. What will be the new NPV when you vary revenue? So sensitivity analysis. Of revenue. What happens when revenue varies adversely? It goes down or it increases? What happens when it varies adversely? It reduces, right? So we have sensitivity analysis of revenue. That one we are now solving question number 2. Question number 2, Roman 1 or Roman A, because we have revenue and then cost. So you say adverse variation of revenue or new revenue, new revenue after adverse variation. What do you get? Initially, if you call that, the revenue was 10. So if it was 10,000, it goes down by 10%. It means that you back in 90. So you multiply this with 90%. The new revenue will be 9,000. Now with this 9,000, what will be the new NPV when we have a new revenue? What will be the new NPV? Our new NPV will be, first you need to get profit. Profit will be revenue minus cost kawaida, which is now 9,000 minus 6,000, which gives you 3,000. And that is the same as the cash flow, right? Cash flow is the same as profit, which is that one, right? So our cash flow is 3,000. With the cash flow of 3,000, NPV, new NPV is NPV will be now 3,000 times PV remains the same, 3.7908 minus 45, right? So we are getting the new NPV after the change. You are getting 6,068.72.4. That is our new NPV. So you can see that as a result of the change on the revenue adversely, meaning that it has gone down, we have 9,000, which gives us a cash flow that is now 3,000. That cash flow will be able to give us an NPV of 6,000. The original NPV was how much? 10,000. 10,000. So you can come here and say, there is adverse change still. NPV has gone down from 10 to 8. So that change is called adverse. So you say that percentage of adverse variation is equal to percentage of adverse variation is equal to the new NPV minus all NPV all over all NPV. So that we have our 6, 8. Ignore the negative sign. Ignore the negative sign even if you get it. So we have 72.4 minus 10. The other one was 10. 663 point. What did he give me here? 0.2. 663.2 all over 10, 663.2. I know that 6 minus 10 is -4. But because you have mentioned that is adverse, you don't need to come and show negative again. The word adverse is already taking care of variation of NPV to the negative side. So get the percentage without showing the sign. So when you see the movement, so initially ilikuwa hii. So the one that was here is the base. That was the normal condition. So you take the new one minus old one, lower old one. Old one is the determinant. It is a criteria or standard. So get me the percentage change. Now, do we have NPV? Well, this is after the NPV. Okay, proceed. So what is the percentage change? 35%. 35.5%. 5%. Okay, so that is a percentage change. So it means that a 10% change of revenue will make the NPV change by 35%. There will be a reduction by 35%. There will be a reduction by 35%. Let's now look at the cost variation. Sensitivity analysis of cost. Sensitivity analysis of cost. So cost has reduced adversely. When cost reduces adversely, what would be the answer? What would be the percentage change? The percentage we use? Initially it was new cost is equal to 6,000 times what percentage? When it varies adversely, what is the new percentage? 110%. So cost is an expense. If expenses have moved to the wrong direction, it means that imepanda. Ikirudi chini, that is good, that is favorable. If it goes up, that is adverse. So we have 10. So we're going to have the new one. So therefore, our annual NPV or our cash flow will be 10,000. Remember, we said that for sensitivity analysis, you change one factor at a time. The rest remain constant. So we have 10,000 minus 66. What is the answer? Is it that? So that new NPV is equal to the cash flow, which is now 43.34 times 3.7, which is the same, minus IO, which is 45. What will be the answer? Yes, that's the new NPV. $83, $88.72. So that is our new NPV after the change. New NPV after the change. The same way you can now talk about adverse variation, percentage of adverse variation or change is equal to new NPV minus all NPV all over all NPV. So the new NPV is 88.72 minus 10,663.2 all over 10,663.2. What is the answer? Again, we know this one should be negative, but because we have mentioned that it's variance, you don't. If it is not negative, just say percentage variation, percentage change, or percentage variation. Then you come and have your 12 minus 10. If it is positive, just say percentage variation. So you're going to have 21.33%. That is sensitivity analysis, where we are looking at the percentage change on NPV as a result of a change on one of the variables. Change on one of the variables. That is quite fair. We can now proceed and look at another illustration. You can call it illustration 2. Illustration 2. So in illustration 2, I want us now to look at this. R limited is considering R limited is considering a project the following cash flows. A project with the following cash flows. So we have here, we have cost of plant. That is the cost of machine. We have running cost. Then we have revenue. We have revenue. We have cash flow. You know how we get the cash flow? Revenue minus cost. So we have the running cost here. That is the normal operation expenses, and then we have revenue. So in year one, we bought the machine in year zero, actually, year zero. Before we start the operation, we bought it at 10,000. In that year, there is no operation. You know, when you buy the machine, that you have not started counting your financial year. So there was no operation. In your first year of operation now, at the end of the year, you didn't buy another machine, but you incurred some running cost, and the revenue is given there still. That means that profit is 8, still the cash flow. Then in the second year, we didn't buy anything. We have 5,000 there, and then we have 14. That means that profit is 9,000. And of course, this one is now 10. That is the money that left, 10,000 bracket. Can you do that? And then we proceed. Copy that, then let me know. We proceed. Can proceed. Right down there, the cost of capital is 9%. Can we proceed? Okay, so cost of capital is 9%, so you can see that's down here. Cost of capital is 9%. Required. Determine the sensitivity of the project. 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 To change of cost of plant. Determine the sensitivity of the project. To change in cost of plant. Determine the sensitivity of the project. To change in cost of plant. Determine the sensitivity of the project. To change in cost of plant. Determine the sensitivity of the project. To change in cost of plant. So if we change the cost of plant, what will the NPV? Change in cost of plant, comma, running cost. Cost of plant, comma, running cost. Cost of plant, comma, running cost. And revenue, running cost and revenue. If each is varied adversely by 10%. If each is varied adversely by 10%. Okay. So sensitivity analysis, determine the sensitivity analysis of the project to change in cost of plant, running cost, revenue. If each is varied adversely by 10%. So the first step is what? To look for the base NPV before any change. That is what we agreed on. Number one is to look for the base NPV. So determine the base NPV solution. Determine the base NPV before any variation. So how to get the base NPV? The base NPV, we need to have our cash flow before any variation or change. And then variables. Variables are going to change, but before they change, so the first thing is to have our original NPV. If you move, now move. So the first one we have here, then we need to have our cash flow. Then we need to have our the PV at 10%. Then we shall have our NPV, right? We shall have our NPV. So the first one, in time 0, the cash flow is negative 10. 0. We invested. The PV here is 1. The time change is 1. There is no variation in value for money. And then therefore our NPV here is this. Then in year 1, our cash flow is what? The cash flow here is profit minus revenue minus the cost. So we have there 20, no, 12 minus 4, which is 8,000. We have been given 8,000 already. You have 8,000 on the notes on the question. And then we have, what is PV for 10% for 1? Use this formula. PV is equal to 1 plus R into negative N. So use this formula to get me the discounting factor. Get me the discounting factor. 90 and 1. So you're having there 0.9091. Multiply the 2 and get me the answer. Then in year 2, we have cash flow to be 9,000. What is PV for? So the key thing here is how do you get cash flow? That is the beginning. In any capital budgeting question where you're going to solve the NPV, you need to know how do you get your cash flow. In year 2, you are saying 0.8264, 0.8264. And then we have 72. 72.8. What is the other one? This other one is if you add them, but total it acquire NPV. Right now it's present value, so there's no problem. So just have the present value. Then when you add now the total, it will give you the NPV. You tapo share minus it. So get me the NPV, the present value now. 74.37. Is it? Kindly confirm so that we know that we are not getting the wrong figures. It would be sad to get. No, this one is actually not 10%, but 9%. What were you given in the question? 9%. So you have to change this one, this two. 9%. Get me the correct ones. Sorry. Get me these figures. Get me those figures. Seven, three, three, 9, 1, 2, and then 75, 75. Okay, so this is our original NPV before any change. Now you go ahead and now calculate NPV after the change. So let's look at sensitivity analysis of cost of plant. Cost of plant, what will change? When we have cost of plant changing, it means that on this one, so we only vary cost of plant. Cost of plant varies adversely by 10%. What will be the new cost of plant? We only change one factor at a time. So here, cost of plant is this one. What will it be? Adversely by 10%. Will be negative 111 here, right? So you can calculate what is the new NPV? Get the new NPV. Will be 30, 39, 14, 0.5. 39, 14.5. So that is what our new NPV will be. So can we now calculate the sensitivity analysis? It has gone down or it has increased? It has gone down, right? NPV has gone down. The other one was 4, 49, 14. Then was now 39, 14. So that means that it has gone down. Therefore, it is adverse variation. So you can come and say sensitivity analysis of adverse variation. Or percentage of adverse variation. Guys have calculated. It was 39, 14. 0.5 minus 49, 14.5 all over 49, 14.5 times 100. 35%. Ignore negative sign. Ignore the negative sign. Can we proceed and do the rest, or you can do the other ones? Tufanye zote ama tutafanya hizi zingine? Sensitivity analysis of running cost. Sensitivity analysis of running cost. So we have, we can be able now to perform the sensitivity analysis of running costs. So we have here a zero, we have cost of plant, we have running cost, we have revenue, we have cash flow, we have PV at 9%, then we have our PV. So you can be able to calculate our present value. So in year zero, running cost remain, cost of plant remain constant. We are not changing it. Running cost is not there. The cash flow is negative 10,000. PV is 1, and so we have here negative 10,000. Right? In year one, we don't have cost. We have here running cost. Running cost, the original one was, the original running cost was 4,000. If it moves adversely, it becomes what? Adverse variation of 4,000 is which percentage? Is what amount? 44. Revenue remains constant. Remember, you only change them one at a time. So revenue remains constant, 12,000. What will be your new cash flow? Same to this one, year 2. We have this one. Initially require 5. So it becomes 5, 550. Now 5,500. This one remains the same, 1,400, 40,000. The change will only come here, and that will impact the cash flow. It will affect the cash flow. So get me that one. This one is 7,600. This one is 8,500, right? So if it remain the same, what was it? 0.8. That one was 0.8. 0.9174. 9174. This one is 0.8417. 17. Get me the present value now. 0.8. our new present values. Our new present values for the two. $69.72.24. 69.72.24. The other one, 75.54. No, 71.54. 71.54 point. 71.54.45. So our NPV is 41.26.69. Right? So what is the percentage variation, percentage change? Percentage advance change. Is it advanced? The other one was 40. Original one was 49, but this one is 41, so it is adverse. Adverse change is equal to new NPV minus old NPV or log old NPV. So we have 49. The other one was 49, 14.5. You're getting 16.03. Okay. Now let's do the last one. The last one is for revenue. Let's do the last one for revenue. So in revenue, these other ones remain the same. So we only change here sensitivity analysis of revenue. So the only thing that changes here is this one. We do the last one, then we can have some break. So that is 4,000. This one is 5,000. It is now the revenue that changes. So this one vary it adversely. What do you get? If you vary 1,200 adversely, you get 18. Oh, okay. So you get this one, and then the other one comes 12,600. Get me the cash flow. The cash flow. The cash flow, 7,600. Then the other one is 6,800. Then you get the figure. Get me now the NPV. First, get the present values and the NPV for those ones. NPV for that. So we're going to have 69, 72.24, and then the other one 57, 23.8. The total is becoming 26.25.8. It can't be 8, one. Can somebody confirm that thing? It can't be 8. Kama hii hii plus hii is equal 8, so that figure is 38. Kuna shida mahali. So it is 62.38. 62.38.32. Then the other one is 63. There is confusion on cash flow. What do you mean by 1676 800? So 96.92. 96.92. Okay, so NPV is 26. 35.24. 26, 35.24. So the percentage changes. Percentage adverse change. Is this one 26, 35.24 minus 49, 14.5 over 49, 14.5. You're getting percentage of 46.38. 46.38%. Okay, so that is the end of sensitivity impact analysis. I want us, because all of us are free, I want us now to take a break of I want us to take a break, then come back to malize sensitivity analysis today, break even point. So let's take a break of 30 minutes. Naweza piga kitu haraka haraka, mkunywe chai, and then we come back and finish break even sensitivity analysis. It is better tumalize mapema, si ndio? It's always better tukimaliza mapema. So take a break and then we come after 30 minutes. 30 minutes ni mingi. So we take a break of how many minutes? Tukuje what time? 6:30 is okay, si ndio? 6:30. 6:30, sawa. That is 20 minutes, around 25 to 20 minutes, sawa. I'm sharing the link for that class. Tumalize sensitivity analysis. Nataka tumalize hii ni mapema na tufanye revision zingine tu, so that we can have enough time to look at other questions. So take a break, kunywa chai.